Welcome to This Week in the Metaverse. It's our new series within our podcast, Into the Metaverse, where Yon and I are going to break down some of the recent news and events in the broader metaverse space. It's really quite exciting what's going on. There's lots of turbulence, but we're going to try to make sense of it all. So today we're going to discuss 3 items that I think are really important and should really help bring some clarity to what's happening in the metaverse. The first item is kind of breaking down what's happening in the financial markets as well as crypto markets. They are kind of linked, and what that means for the metaverse. The second, we're going to look at what Fortnite unveiling their competitor Roblox means for their strategy to conquer the metaverse. And then lastly, we're going to dive into Roblox's first quarter earnings, which were quite interesting. Before that, we have a short announcement from our friends at Roundhill Investments.
This podcast is brought to you by Roundhill Investments, the advisor to the Roundhill Ball Metaverse ETF. The Roundhill Ball Metaverse ETF, which trades on the New York Stock Exchange under the ticker symbol METV, is the largest dedicated metaverse fund in the United States. The ETF tracks an index developed by Ball Metaverse Research Partners, a metaverse-focused indexing and research company headed by industry expert Matthew Ball. For a prospectus and more information, please visit roundhillinvestments.com/ETF/METV. Read carefully. Investing involves risk, including possible loss of principal. Investors should consider the investment objectives, risks, charges, and expenses carefully before investing. Distributor Foreside Fund Services, LLC.
Great, Matthew. I'm so excited about this new segment because we're reading so much, and I know we have the deep dives that we're doing with guests, but we thought that it would be so much fun for our audience and our listeners to really kind of have that sort of quick bites of information of what happened this week. And initially we're just going to talk about it, the two of us, and maybe invite more guests and speakers in the future.
Absolutely. So if you're listening and you're interested in coming on and breaking down the moves in what's happening in the metaverse, reach out to us. We'd be happy to have you. So diving into the first topic, we published on our Substack. Well, I wrote it, but I think we have a lot of collaboration going on the Substack on our Into the Metaverse. So that's intometa.substack.com. You can check it out. We have a post called Investing in the Metaverse Through the Bear Market. And I thought it'd be great to just kind of break down what we wrote about, what's going on, and kind of our view on the markets right now, because it is quite turbulent. You look at stocks like Roblox and Unity, they're down more than 80% peak to trough. The Metaverse ETF, the Roundhill Ball Metaverse ETF is down over 50%. Be honest, I'm in Florida on beach time. I haven't checked it the last few days. It's probably down more than that now. A lot of these things are falling. Crypto assets, we saw what happened with Luna and Terra. So there's a lot of volatility, a lot of turbulence. We talked about this in the beginning of the year, though. We talked about where we are in the hype cycle entering 2022 and how that was kind of worrisome, how that all these inflated expectations, we needed that to come out. And I think a lot of what we're seeing, although it's really drastic drawdowns, it's quite healthy, because there was so much froth built into these stocks, so much exuberance around the metaverse and what it is. A lot of that was catalyzed by Facebook changing its name to Meta and Zuckerberg making the company all in. I think now we're realizing that at least the people that were, metaverse natives, crypto natives, are waking up to the fact that this is not happening tomorrow. This is not happening in 2 years. This is a decade or more journey to realize this vision. And so we have to reset expectations and what we're pricing into these securities, for how we think about this decade journey. And so, we talked about now we can get back to, the picks and shovels work of building this stuff. And I think that's where we're at.
Yeah, and Matthew, and first, just to clarify also for our audience, this is obviously everything we're talking about. Do your own research. This is not a financial advice. We're not trying to promote or discourage people from any stocks. Quite the opposite. We just want to talk about what we care about, and you folks can use that to interpret on your own what stocks are interesting and what stocks are not. Definitely, I think, and Matthew, we talked about it in the first episode of the year when we kicked off Into the Metaverse 2022. We talked about kind of the key events in 2021 with regards to the metaverse. And, we went all the way from the metaverse as a keyword being mentioned one time in Q2 2020 in quarterly earning reports to more than 400 times in Q4 of 2021. And I think now it went down to something like 386 times in Q1, which is still an incredible number. And it may well go down in the next quarter. And you know what? It's totally fine, because the metaverse, as we are all interpreting it, or at least part of the consensus we've been able to establish with our guests and Into the Metaverse, is really at the beginning of the beginning. And as such, it doesn't matter if we're thinking about it as a blockchain-enabled metaverse, or is it a quote-unquote Web2 metaverse? What's really clear is we are very much at the beginning of a transformation of the internet, moving from 2D to 3D, moving from isolated platform to open interoperable platforms, and moving from place where you and I can interact on Snapchat to a place where you and I and 1,000 other people can interact inside a virtual world. And these are really fundamental shifts, and it's going to take time for true, sustainable, captivating, engaging products and experiences to be built, and ultimately driving the value of these companies. So that's kind of one thing that I think our listeners should keep in mind. The second thing that I think our listeners should keep in mind is that a lot of the companies that are building either the application layer or the infrastructure layer of what would enable the metaverse, companies like Roblox, Unity, Nvidia, Epic Games, and others. What's interesting is that majority, if not all of these companies have been around for the past 15, 20, sometimes 25 years, and they are still at the beginning of building that infrastructure. And I think that is incredibly exciting. And so when you, and now I'm talking about our listeners, if you think about these stocks, or if you're thinking about these companies, the time frame that you may want to consider as you're thinking about a potential investment is not necessarily what's going to happen with these companies over the next year or two, but it's really what's going to happen with these companies over the next 5, 7, 10 years, and the role that each of them will play in the emergence of the metaverse.
Yeah, and so if you're trying to think about indicators as to where we are in the cycle, and if you're trying to quote unquote call the bottom, which again, do your own research, but I think Google search trends are extremely powerful. It's very unscientific. It's not a super quantitative indicator, but search interest for the term metaverse. If we look whether it's the U.S. or worldwide, we're down to just roughly 20% of what we were at the peak when Facebook changed its name to Meta. So that says a lot about the hype cycle blowing up at the time. People, oh my God, metaverse, metaverse, metaverse. You mentioned the number of transcript mentions, all the companies, everyone was throwing their hat. We're going to be the metaverse for this and the metaverse for that. And it was all lip service. And now people are kind of walking back and kind of reassessing the situation. And I think that, when you start to see that kind of level out, and when you start to see general trends like that, as well as broad market indicators. In our blog post, we talk about real interest rates, we talk about financial conditions. That's kind of more the plumbing and what goes on inside financial markets. So when you kind of tie the underlying, substance of financial markets with what's actually happening in terms of building the metaverse and interest in the metaverse, I think those are key indicators going forwards as to potentially trying to identify where we might, head in the other direction. I don't think that's happening just yet. It's going to be turbulent. And that's why we wrote about investing through the bear market, because this is a bear market and these things take time to flush out. And I don't think we're quite there yet.
Totally. And one more thing is that it doesn't really matter if we're talking about quote unquote Web2 companies or quote unquote Web3 companies and ecosystems, if it's Coinbase or with the implosion of what happened with the Luna ecosystem. It doesn't really matter. I think what matters is that we all keep in mind that we are really at the very early stages of the emergence of a different type of internet. Again, that transition from 2D to 3D, massive social places, recognizing that multiplayer is a term that will not only be exclusive to games in the future. There's going to be multiplayer products and different brands and experiences, powered by it's going to be by centralized platforms, some of it decentralized platforms. But the consistency of the earliestness of where we are, that's what's important. And so when we think about the decline of the markets at the moment, sure, it's not fun to witness that, either as a spectator, definitely not as a shareholder, or a coin holder of any of those platforms. It's not fun when you look at stocks from like Roblox and Nvidia and Unity and other, quote unquote, metaverse related stocks that are down anywhere from 50 to 80% from their all-time high. But guess what? So are other stocks and companies in the tech sector. There obviously has been a incredible growth very fast because of COVID over the last couple of years, and the markets are now trying to figure out what is the new normal. And the truth is, Matthew, and I'm not an expert, but I think the truth is that it's changing, but also no one really knows where this is heading. And so what we get excited about, and hopefully our audience get excited about as well, is the paradigm shift that the metaverse is responsible for. And again, taking a very long-term view on how the metaverse is going to really transform the internet and which companies are the ones that are really building the infrastructure, the application layer, and these next generation products that are going to bring the metaverse vision to life.
Absolutely. I think that's a great segue into the next item we have on the agenda, where we want to discuss, Epic Games going after Roblox by releasing the Unreal editor for Fortnite. I think this is something that we've talked a lot about, on several occasions. And, they've had different variations and different iterations of the product. There was the Fortnite creative mode at one point. I speculated at one point they might buy, Manticore to get the core platform. I think what we're looking at here is they're continuing to try to build the UGC layer, which I think we're both very passionate about, because we're both very passionate about empowering creators in the metaverse and democratizing real-time 3D development, as Rev talked about in our episode where we dove into NVIDIA and the Omniverse in season 1. And I think this is in keeping with that, and this is in keeping with Epic's vision to building an egalitarian, democratized metaverse.
Matthew, this is such a phenomenal topic, and it's happening in such an interesting time, right? Because Roblox has obviously been growing and cementing their dominant market position as a category leader, I would say, in the UGC kind of marketplace of 3D experiences. And I think calling all these things 3D experiences, I think really fits where we're heading and what the vision of a lot of these companies are, right? To really enable all sorts of 3D experiences, not just quote unquote video games. But to your point, and I think from the beginning of our podcast together, and maybe even before that, from the beginning of knowing each other, I think we both have been very bullish on companies like Epic, like Roblox, and others. But specifically with Epic, there is something really interesting that Epic is doing with regard to their strategy, where they have the Unreal Engine, which in and of itself is a powerful engine that is essentially going to serve all sort of sectors and industries, right? Anywhere from games to music to movies, right? We've seen what The Mandalorian has done building on the Unreal Engine. And so obviously they have that as kind of one piece of their flywheel. The other piece of their flywheel that they have been really building and going against companies like Steam, right, is building a publishing and distribution platform where anyone can come and publish a game with very attractive economic model, and you can publish your 3D games on the Epic Game Store and potentially use the Epic publishing services. And then the third piece, which was really missing for Epic, is that platform play, which again Roblox has been the very dominant and the category leader, and will most likely continue to be a powerful category leader in the years ahead. But Epic started to do that from a different angle. They launched Fortnite, which in and of itself accidentally became so big. And then they started to wanting to turn Fortnite into a platform. And just, to give historical perspective to our audience, Fortnite started as a battle multiplayer first-person shooter game. Then Epic introduced the Fortnite creative mode, which really enabled users, players, gamers to create skins and different avatar accessories that can be integrated into the Fortnite game and make some money. I think, if I'm not mistaken, there was something like a 5% royalty that users can make on top of the avatar skins and accessories that they create. Now, with the recent announcement, for folks who read the interview at Fast Company with Tim Sweeney, and as a side note, this is a formal invitation to Tim Sweeney to come to Into the Metaverse podcast. Tim, we want you on the podcast. But with the recent announcement of Tim on Fast Company, that Epic is now integrating the Unreal editor into Fortnite. And what that means that developers and players and gamers and creators are going to be able to create much more comprehensive experiences inside the Fortnite ecosystem. And one cannot ignore or avoid the comparison to what Epic is doing with the Fortnite, trying to turn that into a platform that will directly compete in attracting a new generation of creators of 3D experiences away from the Roblox platform. To be honest, I don't think that's going to be an easy battle, but I think it's a battle that would ultimately push both companies to continue and develop and innovate solutions. And what's interesting, Matthew, and with that, maybe I'll hand over to you for more comments, is it's really interesting because I think what Fortnite and Epic are trying to do, They're trying to build the capabilities that will attract the new generation of creators, anywhere from teenagers to young adults, to come and build inside Fortnite like they do on the Roblox platform and the Roblox engine. But in parallel to that, we know that Roblox is really pushing hard in attracting and retaining older demographics of users. And so it seems like Roblox is looking at expanding more and more into the older demographic turf that Fortnite has secured for Epic, while Fortnite is trying to go downstream with the demographics, and through the integration of the Unreal Editor into the Fortnite creative mode, they are looking to take away users and developers from the Roblox ecosystem. And I think that battle is fascinating.
It's definitely a battle royale for the ages, and we'll see who the winner chicken dinner is. But it's also important to point out that they're both light years ahead of everyone else in building this from a lot of the assets that they've put together, at least from the consumer facing layer. So, from that perspective, they can both succeed. It's not like this is a zero sum game. Just for perspective, Roblox is only at 54 million daily active users as of March, as of the end of the first quarter, excuse me. That sounds like a lot, but Facebook Meta across all their platforms, Instagram, WhatsApp, etc., has over 2 billion daily active users, right? So, we're not even close to the same ballpark. And so there's a large greenfield opportunity for both of them to grow into. And so it's not like they have to fight each other to the death. They can both be successful. So, we'll see how it plays out. This could very likely be another Fortnite creative mode. This could flop just like it did before, and they still might have to go out and buy something to plug that hole. It hasn't really been Epic's DNA to buy stuff to plug holes like that. So, maybe they'll have to change that. They have plenty of money to do it. But, we have to see how that shakes out.
I do think that there is a fundamental difference between the two environments, right? And because Fortnite started as a game, intending now to become a platform, Roblox has always been a platform. Roblox doesn't create their own content. Roblox built a consistent, comprehensive platform that comprised of a game engine, a publishing and distribution platform, a social network layer, cloud services for developers, right? Roblox is by definition a platform. And we know how long it took Roblox to get to where it is today and build. And we also know how much work Roblox has ahead of itself in order to really level up and increase the capabilities of the platform and making it even more attractive. All of those things, Epic is really starting from a very early stage to build into Fortnite with the hope that it can become a platform. And Matthew, to your point, the jury is still out. But I think this is great for both companies, that there is that kind of battle royale between the both of them. It will push innovation. It will push technical capabilities. I think one thing worth mentioning also on the Epic Game front is the investment that they received for companies like Lego, and the family office of the family who owns Lego invested $1 billion into Epic Games. Lego didn't invest $1 billion in Epic Games just because they look at it as a financial investment, right? It was published that that Epic Games are going to work with Lego to build, quote unquote, a metaverse for kids. This is by definition going head to head against what Roblox has been building for the past 15 years. And so, it's exciting to see both of them pushing on innovation, technology, and enabling both developers and users to experience a whole new world of possibilities in 3D.
Definitely. And, I think, again, another great segue, we can move into our last item for today's episode, where we're going to discuss Roblox's first quarter earnings. I kind of alluded to it already, but I'll just give a rundown of some of the key numbers. Daily active users were 54.1 million in the first quarter. That was up 28.5% year on year and up 9.3% sequentially. For hypergrowth companies, we look at numbers sequentially. That's quarter over quarter, so compared to the fourth quarter. If you look at hours of engagement, that's something to track as well. Hours engaged up 22.2% year on year and up 9.3% sequentially. And my favorite metric is you just divide A by B, you get hours engaged per DAU. Your hours engaged per DAU was 2.4. That was down 5% year on year. Mind you, they had a very, very tough COVID comp from last year, and it was flat sequentially, which is actually quite encouraging. Bookings per user down quite substantially. That's largely due to the fact that most of the DAU growth now is coming from emerging markets, coming from Asia, other parts of the world where they're not yet monetizing as heavily as they are in Western markets. So mostly North America and the UK and Western Europe. So as those markets grow and mature, particularly like Japan and Korea, where incomes are high, those can be, eventually become, massively accretive. They talked about India as being high growth, but anyone who's been in the games industry for a long time, we talked about this with Joe Kim earlier in the season 2, it's still not really a mature market. There's not a lot of spending power. So that's going to maintain dilution to their bookings per user throughout the year. And then just lastly, total bookings were $631.2 million, down 3% year on year, down 18% sequentially. Again, that's reflecting what I just kind of talked about, and then the normal seasonality and the tough comp. They also gave numbers for April. They like to give monthly numbers. They give, they give you a peek of what's happening ahead. So for April, they reported that bookings were down 8 to 10% year on year. Again, very tough comp because that COVID comp carried over into April from last year. DAUs were still up 23% year on year. So again, you're still seeing strong user growth. The flywheel effect on the social side is still there. Hours engaged were up 18% year on year. And the average bookings per daily active user, again, was down roughly 25% year on year. So clearly, those trends of lower monetization overall because of high growth in emerging markets is kind of the prevalent theme. I think aside from that, the biggest takeaway I got was that, I think Matt Ball said it best. They're getting serious about monetization, which I think for a long time it was kind of like, we're going to build the platform, we're going to build security, we're going to build we're going to build a UGC that's really powerful and has all these flywheel effects, and then the monetization will follow. They started talking about advertising opportunities and really doing branded content in a much more, deep way with programmatic advertising, similar to what you see with Facebook and with Google and everything. They talked about even using NFTs eventually for having real ownership of items. So I think they're starting to really think about getting serious about monetization. I'm not sure how I feel about that as a stock investor. If you're an investor, on the one hand, that probably means that near-term bookings estimates, revenue estimates might be too low because they're going to try to pull the levers and pull the growth side faster. The real question becomes: does that impede user growth? Does that impede investments in other parts of the business? Are they going to trade away growth 10 years from now for growth tomorrow? And that's always the fine gas pedal, brake pedal of high growth tech companies, is making investments, both for today and for tomorrow. And that's a very tough balancing act.
Yeah, and Matthew, building on your fantastic kind of capturing of their analyst of their quarterly report. First, I think we need to keep in mind also that they have significant amount of cash, available cash. They are a cash flow generating company, and I think that's important. Maybe while I'm kind of perusing through my thoughts, you can kind of capture how much free cash flow Roblox has as a company. I don't remember the number, but I think that's important. They are in a position where they can really prioritize what's important for the long term of the company, not necessarily what's important for quarterly earning reports and what analysts and investors expect to see. If I take a step back, I think to some of what you've mentioned, to me, there's like two big buckets that people are looking for. And it depends on who you are when you're looking at it, right? The one bucket is user engagement and user growth, which means, is the flywheel of Roblox working? And the flywheel is more developers build more experiences attract more users attract their friends, and so on and so forth. That's kind of the core flywheel of the Roblox ecosystem. And we do see, although a slower growth, but we are seeing growth in user base, and we're seeing growth in time spent on the platform. It's a moderate growth. It's not the growth of 2020 and 2021, but nonetheless, it's growing. It is growing less in North America. It is growing much faster in non-North American markets, some of which are countries like Brazil, South Korea, Philippines, Indonesia, Thailand, Russia, Brazil, Mexico. These are some of the fastest, India, some of the fastest growing geographies outside of North America, which, by the way, the common denominator of many of those geographies these are emerging markets, which leads me to the second bucket of what people look at, which is monetization and bookings per DAU. There is no doubt that we're seeing decline, and that decline may even continue in the next several quarters. In my opinion, that is okay because Roblox have reached a very dominant position in the market with the demographics under 18 in North America. I think I've seen a number, and folks are more than invited to correct me if I'm wrong, but I think I've seen a number somewhere in one of the publishings of the Roblox numbers that about 80% of the 9 to 13 audience age group in North America is on or has been on the Roblox platform. 80%, 4 out of 5 Americans in the age 9-13 are on or have been on the Roblox platform. I don't think there's ever been a media platform with that level of dominance in a certain age group. So obviously Roblox is going to reach a certain plateau in North America when it comes to user growth. But guess what? They are also in 200 other markets, and they are growing really, really well in those markets. However, going back to the point of monetization and bookings per DAO, these markets don't have the same consumer purchase behavior like North America, either Canada or the United States. And it will take time. I don't know how long. It might take 3 years, 5 years, 7 years, until those markets are reaching a certain level of purchase power that the North American markets have. But when they do, based on the purchase behavior we've seen in the past 5 years on the Roblox platform by North American audience, and add to that the fact that Roblox is aging up, I believe that the best years of Roblox are ahead of them when it comes to monetization and booking. This is just my perspective and point of view. And so for me, both as a someone who is just covering the metaverse like with you, Matthew, but also as an investor and also as a builder in metaverse platform, what I care about the most still at this point is the growth of the user base, the growth of the developer ecosystem of the Roblox platform, the growth of the opportunities to attract brands and new content creators to build more unique and complex experiences to attract and retain older demographics, and of course the expansion in international markets. These are the things in my mind that are really critical for the next 3 to 5 years, because the biggest strategic challenge Roblox has, in my opinion, is the ability of the platform to attract and retain their user base. Not only the existing user base, but also attracting older demographic in international markets who can come for the first time to the Roblox platform and stick around for the long term.
Yeah, I'll just put some numbers behind that. Dave Baszucki, the CEO, actually called out some interesting numbers on the emerging markets on the earnings call. He mentioned India in particular. So he talked about India having enormous potential user activity. In the first quarter of 22, they grew daily active users 160% year on year. It's still under 1 million daily active users. India is a country with 1 billion people. So, there's still a lot of headroom there, as he said. Put that in perspective versus the 54 million total Roblox DAUs. So it's still quite underpenetrated from a pure user perspective. So that's something to call out. He also talked about Japan, because I think, Japan's a much more mature market. They roughly spend the same amount on games as the not as much as the US and China, but they're a close third. So it's a really good market for any gaming company to try to get into. It's also really tough, but they saw a growth of 3x relative to Q1 of 21. They're at 183,000 daily active users now in Japan. So still just scratching the surface. That's also a large country population, a large gaming population, a large digital population. So there's a lot of opportunities in Japan as well. And then just to come back to your question around the cash flow and the balance sheet cash, they've got over $3 billion of cash on the balance sheet. They tapped the debt markets really before interest rates started skyrocketing. So, a nice little prudent move there. So they added some cash to the balance sheet there. They also generated 105 million of free cash flow in the quarter. On a trailing 12-month basis, we financial analysts like to look at cash flow on a trailing 12-month basis, over $500 million of free cash flow. If you annualize out the first quarter, you're still over $400 million. So they've got cash, they generate cash. They're not burning cash like some of these other companies that are just setting money on fire to grow. So they're growing rapidly and they're doing it while not just burning money doing it. So they've got a good machine built. It's really about managing the brake pedal and the gas pedal to make sure they don't go too fast, they don't go too slow. If you go too fast, you're going to burn all your money and you're going to end up, having to, I said it in the newsletter and I like to say it all the time, raise money when you can, not when you have to. You never want to be in a situation where you're raising money as a private company, as a startup, as a public company, when you have to. And so, you want to be well positioned on your cash flow, particularly in this environment. So being able to manage that gas pedal, brake pedal, and really make sure that, they're growing at the right pace to manage the cash burn, that's going to be key going forwards.
And maybe a final note on Roblox. What folks should keep in mind, Matthew, is that although most people have only known about Roblox for the last couple of years, unless you have kids in the demographics, and then in which case you know about Roblox for many years now. But for the majority of folks out there, Roblox is not a tiny, young, early stage, hyped startup at growth phase company. Roblox is a 16-year-old technology company founded in 2006. They are a company that have proven that they can grow and can grow sustainably. And if I had to trust a company to go through the challenges of where we are in the moment in the market cycle, if I should trust a company that know how to handle their cash responsibly while growing, Roblox is definitely a company that has proven time and again over the past 16 years that they know how to operate, that they know how to build a company, and that they are pursuing a very long-term strategy of the world that they would like to create. And I think that is a massive advantage when you think about the perseverance, resilience, and the fortitude of building a platform that will be a contender as one of the main platforms in the next era of the internet.
Absolutely. And I think that's a great spot to end today's episode. So we'll wrap up. Thanks everyone for listening, and we'll come back, with more episodes next week, both in the core Into the Metaverse, as well as another wrap of This Week in the Metaverse. Have a good one.